Hello and welcome to another episode of our From the Helm series here at Bell Financial Group. I'm Grady Wulff, Senior Market Analyst with Bell Financial Group. Sports Entertainment Group, ASX, SEG, is really the one-stop shop for everything sport in the media, entertainment, events, talent management. You name it, they do it. And it's exciting today that I'm joined by Trent, the CFO of SEG, and also Craig Hutchison, the CEO of SEG, to discuss the company's FY25 results, what FY26 looks like with strong growth potential, and of course, what the company offers for investors in the marketplace. Gentlemen, thank you so much for joining me today.
Thanks, Grady.
Thanks for having us.
Now, for our investors out there who may not be aware of Sports Entertainment Group and the network and everything that you guys do, they might be aware of one division, but there is multiple divisions to the company. Can you give us an overview of the company and what you've been up to lately?
Thanks, Grady. We're a one-stop shop for sport in essence, and we're trying to connect a brand to a fan on scale and to make a sports fan's day. So anything in sport where we think we can be relevant to a fan and make their experience a wonderful one, but also be relevant to a brand or an advertiser and drive value or an outcome for them is our business. And what most people might think of us as a legacy audio business has transformed significantly over the last 6 years, where we're a fully integrated business across audio, podcast streaming, technology, video, snackable content, television, production, sports teams, publishing, talent management, and events and beyond.
It doesn't stop there.
So we try and solve problems for brands while using the power of sport. And Grady, as you would know, sport is the last bastion of real-time consumption. It's what people do in real time. It's got a very emotive presence for advertisers, and it is one area which will keep growing because in an ever-increasing complicated world, we want to escape our worries by watching or listening or consuming content such as sport when it happens, not in time shift or in delay, but at real time.
Absolutely. Now, there are key revenue drivers, obviously, of your results. And as I mentioned at the start, a lot of people might be familiar with just one, the radio network, or just some of the key drivers. But what are the key drivers of revenue in FY25 that you saw?
Yeah, so we really saw some really good growth in our complementary services. So the audio business did incredibly well, but we saw some good growth in digital, which obviously the market is moving towards. TV production has really grown, and in FY26 we're really confident about the revenue stream there. We've won some really key customers with Harness Racing Victoria, a 5-year production tender there. We've also won the Agenda Setters, which has been on air, and we're doing the production there, which Craig is a key talent on. So the TV production business has grown exceptionally well. And then we've also got the talent management business, which is really growing nicely in the background. We manage a lot of talent. We manage entertainment talent. We manage sport talent, and it integrates the whole sport and entertainment quite well. And then our events business grows incredibly quickly as well. So in the events business, we do trips for large customers. We also do Super Bowl trip, which a lot of people know.
Wow.
We have a travel
I think increasingly, and it's well summarised by Trent, an advertiser is looking for a deeper solution for their needs, and their needs are many and varied. So we've built a little bit of a services web around our advertising business to try and be more increasingly relevant to a solution and to position ourselves to be better considered. So where the customers want audiences from, we've generally edged into or found ourselves in, like signage in venues, for instance, which is a very compelling and results-led outcome for advertisers. We've got ourselves into that game because it forms part of a solution with a radio buy or with a digital buy. I think increasingly we've looked at how do we be customer-first and customer-centric and try and obsess what we can solve for them in sport somewhere. Yeah. And to be fully national, we've now got scale. So we started this business as a supplier to other radio stations for the first 12 years, and we continue to do that and enjoy that. We've since added a whole raft of more than 40 stations of our own that we own.
Including Perth.
Including Perth, not only from a radio sense, but the mighty Perth Wildcats, which are in for a big season, and we've been a big part of our journey. So, we've tried to be an integrated solution, whether that be in teams or publishing, and we want to be relevant to every regional town and metro town of the country. So that's been a kind of heavy build that's now finished, and we're into kind of the harvest era of our radio journey, and supporting that with deeper solutions around the outside.
Now, FY25, we're just on the back of results season, a very strong season, very strong year for SEG, or Sports Entertainment Group. So congratulations to both of you there. You unveiled Profit soaring 629%. That is something that's unheard of in a year that we had so many headwinds, not only for your sector, but across the board with high level of costs, inflation, high interest rates, so many macro headwinds, but you managed to do kind of the unthinkable. What were the key drivers of the performance and where does FY26 take you?
Well, I'll speak a little bit to just the big event that drove that, for instance, and that is we are divesting the Perth Wildcats investment, so we're in a staged exit. Stage one, we purchased the asset for $8.5 million in the middle of 2021 and we accepted an offer for 40 million last year.
Oh, wow.
52.5% of that has already been materialised, and the last two phases of the stage exit happened into the early parts and middle parts of next year.
Yeah.
Compelling opportunity for our shareholders, a really good deal. It's a great asset in Perth and will continue to be a tremendous part of your city.
Yes, exactly.
And very much part of our hearts.
Yeah.
And it's had a real effect on our advertising business in particular in Perth as well. But aside from that, we've had good growth in areas like television and in some areas of complementary services, and our deeper offering is now showing up. It's also, I think, our cost base has been not right size is not the right word, but it's certainly found its level in terms of what it needs to support the radio and media and digital asset meaningfully, given that we've finished the build of buying and establishing stations largely, unless they're highly synergistic from here and a good EBITDA from day one, we won't do them. But any further commentary
on EBITDA, I was going to say
around that trend?
Grew 62%. So again, that doesn't just speak to an acquisition being sold or an asset being sold off. It says how good your results were. So tell us about the driver of EBITDA to 10.5 million.
Yeah, so that it talks to a lot of what Craig was just talking about. We have built a footprint. So for the last 8 years, we've worked incredibly hard to build a national footprint. And what that brings with it is scale and reach and audience and all of those things. So once you integrate all of our business units together, you now get that scale. You now get the advertiser that can go into here, or here and plug and play. And so we now have a cost base that really, as we continue to grow into the future, does not require much scale to increase. So we will be able to generate the revenue growth will largely go through the bottom line in future, which is exciting. And I think we've done some guidance around FY26. We expect double-digit growth again, and we're really confident about that.
Yeah, again, a really strong outlook because, again, we saw a lot of volatility heading into the new financial year and across the board. Having just covered reporting season, a lot of companies are really reluctant to give anything above single-digit earnings growth. So congratulations. Now, let's talk about the completion of the RSN acquisition. I know we're talking about different acquisitions you guys are doing. What was the move behind this and how will it grow earnings?
Well, we're a big believer in racing, for instance, in where it fits in our world. It's a area where there's high synergies. We're already deeply invested. We own 22 SEN track licenses, which is a different way of racing. It's a bit younger and a bit more contemporary in the way it's consumed. RSN's a wonderful legacy asset in Melbourne, 100 years of history. It's been part of the culture of the city for a long time.
Melbourne is known for its racing.
It is. It came with a regional distribution network that hadn't been unlocked by the industry or the previous owners. So we've been able to unlock some of those stations as standalone stations. The first of those is SEN Goulburn Valley, which is on the air and performing well as a sports station that was part of that network. So we'll take a town-by-town approach to it. There's also high synergies in pulling together a breakfast show and a morning show and a duplicity. And also it gives our advertisers an additional reach into a whole new audience and it also embeds us deeper in the racing industry, which is one of the biggest in the country. I think racing hasn't really had too many external entrepreneurs or entrepreneurialistic companies like ours in it. It's been largely owned by wagerers or industry assets.
Very legacy-based, isn't it, over the years?
And it's an incredible driver of economic activity, and it's a 365-day-a-year business with good distribution. So there's a lot of things that sort of came with it, and we think it's been a fair deal for all parties. And it gives a a multi-year ongoing relationship with the codes themselves, who are great, Racing Victoria, Harness Racing Victoria, and Greyhound Racing Victoria. So it fits, and it's already we've given guidance that it will be a profitable year one venture, and it's already off to that start.
Yeah. Do you also find with those kind of acquisitions that once you sign them with one of the jurisdictions with racing, for example, others kind of come knocking as well? Like they get excited and they want a piece of that.
It's an early and cheeky question. Right?
I know.
No, respect the question because I I think anything in racing there where there's audio synergy or opportunity, we remain really interested in.
Yeah.
And so and the same in television production for that matter.
Yeah.
The industry, the energy that we think we can bring, and a different way of broadcasting and connecting to fandom or growing fandom is something that we think is a little unique to us. And I mean, racing and sport are close cousins.
Yes, absolutely.
The audience overlaps are very, very complementary. And
the different seasons as well. Yeah. And as you said, 365 days a year. You can't go wrong with racing.
It's a good point. I mean, October, November and February, March in particular areas of our calendar year we want to continue to build, and they serve those areas well.
Now, competitive landscape, investors looking for an investment in this kind of sports entertainment space, there's minimal options on the listed space. How do you see that kind of benefiting as a tailwind to Sports Entertainment Group over the coming years? Yeah,
we think we've got a unique story. Like, I don't think there's many companies like ours that have got the depth of sporting assets, services or offerings in this part of the world. So we're a little bit different. We think the sector is incredibly strong, and we're coming to an era of people wanting to have experiences to connect through content, to share the moments. There's scale that can be achieved through digital now that's never before seen. And it's a very emotive product that does drive good outcomes for brands and fans alike. So we think it's a unique spot. There's a fairly significant moat around our business in terms of the barriers to entry. We think we're difficult to replicate. It's been a lot of years building out regional distribution and syndication deals and depth of content and talent, sports rights. We're in every sport that we can think of somewhere as an audio rights holder, a television production partner, or both. So I think that's got a unique, it's a hard to replicate model.
Yeah, and it takes time to build.
Yeah. And we think we're well positioned for the consolidation market that will happen in the coming years.
On that note, unfortunately, the media broader industry is set to face a decline in FY26, and we've seen over the years it has been really consolidating and really tough headwinds for the sector, but you've somehow managed to outperform. What is the structural advantage and competitive advantage of your company, and why do you think that is sustainable over the long run?
Well, I think it's because we play in one field and we're very hyper-focused on that. Yeah. So sport or sports entertainment is our fairway. We are committed to playing only in that fairway, and that makes it a little bit unique. We're not playing in multiple areas, and we're merely trying to dominate one.
Perfect.
And I think that's
not spreading too thin.
And I think if you look at, say, a bad example, but television trends, while television revenues decline, sports revenues on television have grown significantly.
Yeah.
Sports rights costs are growing significantly because the value of those is growing into the TV market. So we think sport as a medium will grow in value. We're very confident racing has a journey as well.
Yeah.
And we think that's cushioned us against, I'm probably a bit more bullish about the media market and where it'll land than most in some of those numbers. But I think we will continue to grow against the industry, which is a little bit more fragmented. But to what speed is the proof of the pudding will be in the eating.
Yeah, kind of on the growth story, you need to adapt to ever-changing technology. AI is a huge player in the market right now, and if you're not doing it, you're falling behind. And kind of innovating across mobile platform, podcasts, content creation is ever-changing. How are you adapting to that constantly year on year, and how are you managing costs at the same time?
Well, I think the best thing that we've done in that journey is to get ourselves match fit 6 years ago and to start it as a vertical of the business. So we have a technology business embedded called Project Diamond. Mm-hmm. Its story is a journey in its own right, isn't it, Trent? And we've played a long game on talented people and building our own source code, our own tech stack, working with external clients, innovating. We've got world-class technology like SEN Stadium, which is no latency audio in venue, which is the first in the world.
Wow.
SEN Sync, which is to pair the pitches at home to using the algorithm to what you're hearing on your SEN app on your mobile phone. If you haven't downloaded the SEN app, then you do one thing today watching this vidcast, please do so.
Check it out. And
we'll be a logged in user and can come on the journey with us as well.
Yeah.
And so we've seen the shift of sport fans to mobile. Yeah. I mean, once upon a time, famous was here, and now you're famous here in your hand in a mobile phone perspective. Yeah. So we've been hell-bent on being where the sports fan is, which is in mobile. Yeah. And we think that, the AI innovations that are coming really across businesses suit us well. Yeah. And we'll like everyone, we'll be aggressive in how we find not just synergy, but opportunity to scale a sports offering through through AI, but also through cutting edge technology of our own.
Yeah, and Trent, obviously a CFO of a business, you've got to control lots of costs and keep those down, and profit appreciation and margin appreciation is a big one as well. How did you navigate FY25 and how are you finding FY26? First of all, well done on that. So yeah, how are you managing costs in this era?
Yeah, it's a really interesting point. It's really just focusing your attention on where your growth is. Yeah. So just understanding the areas of your business that you can get the most return from and focusing your attention there. I think the digital space we've done an incredible job at, and the team's done really well, and we're happy to focus some attention there. But then you have to be really strong on the other areas because you can't pay everyone. So
no, exactly.
That's kind of where my focus is. The TV business has done an incredible job at growing and winning some really great new contracts for the business. And so we've committed some capital spend to that. But we've got an internal hurdle rate that we need to achieve. And so therefore all of our projects have a marker and we've got to meet that marker. And at the moment, the investment's in the TV business and it looks like it'll pay off into FY26, which is really exciting.
It's a very strategic way to put cost management, and a lot of companies should take note for that. Finally, what can investors expect over the next 12 months on a news flow front, and how is the growth acceleration going to excite the market?
Well, they can expect double-digit growth, which we've forecast to the market. They can expect that we will start to see the benefit of harvesting our stations that are now getting more established. There's big upside and scale into New South Wales and Queensland. We've got good longevity around our rights deals now in most sports. We've got some runway in cricket, AFL, NRL and beyond. We've got a format in each state. Yeah. We've got tailwinds in our television business. We've got an event business that's growing on the back of this era of wanting to go and experience and do things and say you did it.
Yeah.
We've got high hopes around our sports teams business and what might be able to be replicated in other teams, what we've been able to do in the Wildcats. Certainly our journey to Nipple's off to a fabulous start in 2 years, and we're
what a place to be right
bullish now on where that sport can go, as well as basketball. We've placed our investments into the second and third biggest community and participation sports in netball and basketball in a team sense. They're both bigger than AFL and NRL in participation, and we think products for the times with the shorter length of games and elite national competitions growing. And so we're bullish on both of those codes, and we think we can repay and harvest some of the faith that the market and some long-time shareholders have put in us.
Yeah.
And fortunately, the market at the moment is agreeing with that, and it's a daily challenge. But we feel very confident that we're in the right sector at the right time.
Yeah, bring on the tailwinds for FY26. We're really looking forward to following the journey of SEN. Thanks so much for joining us today. And thank you for joining us for that episode of From the Helm. I really hope you enjoyed it. If you did, be sure to subscribe to our YouTube channel to stay up to date with all market commentary, insights, and of course, exclusive interviews like this one.